Now, you've heard of Bitcoin and its ability to apparently create money from nothing, and hundreds of billions of dollars of money at that. But you may have missed just how wacky the world of cryptocurrencies has become in recent weeks. There are over 1,000 of them now, more being created all the time, and it looks like a classic gold rush. But even more weird has been the way ordinary companies have jumped on the bandwagon with some spectacular market results. One American iced tea maker, for example, changed its name in December from Long Island Iced Tea Corporation to Long Blockchain Corporation. Blockchain being the technology that powers Bitcoin and other digital currencies. Well, the share price almost tripled. Not surprisingly, regulators are worried, and many think this is reminiscent of the worst excesses of the dot-com bubble. Our technology editor David Grossman explains what's been going on.
A rose by any other name, of course, but in the corporate world, names definitely matter. Would, for example, the promising startup Backrub have managed to conquer the world had it not changed its name to Google? Would Blue Ribbon Sports have made such a swoosh had it not become Nike?
20 years ago, it seemed that every company was sticking the prefix E or the suffix .com on their name. Since then, we've had the words biotech and nano putting rocket boosters under a firm's share price. Today, well, it's anything to do with blockchain.
If someone sticks blockchain in their name or in their propaganda, then people are going to jump on that and say, oh, yeah, that's the sort of thing I'm looking for because I've heard there's good returns in that area. And that's what everybody's looking for in investments, returns. So you're seeing that huge speculation, driven, I think, at the moment with the hype around Bitcoin. Anything that's going from 1,000 to 17,000 in a year, that's what people call returns. And if they think blockchain can do similar, they're going to want some.
Blockchain is the technology that underpins cryptocurrencies like Bitcoin. Essentially, it allows every participant in a market or currency to verify every transaction. It means you can do away with a central register that's vulnerable to hacking.
Blockchain is opening up a way of doing finance that's much more efficient, much more transparent, much faster, much cheaper, and it gives us the ability to really cut out a lot of the middlemen and automate a lot of processes while still keeping the same level or even an improved degree of security. But it will take time. It's not going to get there tomorrow. We still got a long way to go, and we need to battle test the technology, and there'll be ups and downs along the way. But I think for a starting point, it's a really good start.
But are companies simply cashing in on the name? Take, for example, Online PLC, an Essex-based company that plodded along with a share price so flat you could hang washing on it until late October, when it changed its name to Online Blockchain PLC, and boom, a 400% share price rise. The CEO says the name change simply reflected the reality of what the company was now doing.
We've only changed our name the once in a generation, but it was a big change and it has had a big effect. But, we could have carried on calling ourselves just online, carried on with blockchain stuff, and nobody would have known until maybe another 6 or 9 months. And that would really be a distortion of what the facts were. So it's really important with names that you tell people what you're doing and that you transmit your message. I mean, it's all well and good and being called something obscure, but it's very hard to get your message across.
In some cases, though, in the early stages of a new technology, it's not always possible to say which company's claims are real and which mere illusion.
I think investors have to be very careful. There's a lot of good projects out there, and equally there's a lot of projects that have understood that just by using the buzzword blockchain, you can attract a lot of money, a lot of investors, and a lot of hype. And I think a lot of due diligence is required, a lot of homework is required, a lot of self-education, self-teaching is required to do, before putting any money to these projects.
As the super investor Warren Buffett sagely remarked, only when the tide goes out do you discover who's been swimming naked. The cryptocurrency blockchain tide is still rising, and who knows, might do for decades, or it could all drain into the sand tomorrow, exposing, well, who knows what.
David Grossman. At least in the time of tulip mania, there were actual tulips at the end of it all, and people understood what they could do. But let's talk to Professor Peter Ayton, who's a psychologist specialising in behavioural economics. Good evening to you. Would you buy shares into a company that changed its name and changed its focus to sort of dabbling in cryptocurrencies?
Possibly. I mean, I'm a human being like everybody else. I don't suppose my behaviour would be, that discrepant from what everybody else might think.
I mean, to me, it sort of looks a bit crazy What is it motivating people to go into this? What is it that greed has taken over the market? There's some psychology of this, isn't there?
Well, yes, there's a large literature in psychology which sort of points to sort of behaviour which is sort of anomalous with respect to what economists like to think ought to be happening. I mean, that shouldn't be any surprise. I mean, we've just had yet another Nobel Prize for a behavioural economist this year. So the idea that there's sort of discrepancies between what classical economics predicts and what we observe happening is no surprise to me.
But there's a sort of, is it almost hormonal, biological? You can put people's brains in MRIs and see what they're thinking when they make some of these choices.
Yeah,
right?
I mean, this is the field of neuroeconomics, which might, the existence of such a field would be science fiction, 20 years ago, but now it's sort of, it's providing us with all sorts of insights into the way the brain does things which then have economic ramifications. And I mean, it seems kind of slightly curious to me that we have this sort of interest in phenomena which sort of look psychological more than economic.
Right.
I mean, the phrase irrational exuberance, I think, is one of the hallmarks of the surprise that, human beings have brains and emotions and all sorts of things. Why shouldn't that reflect in economic behavior?
I mean, just looking at this, though, you've got people borrowing money to invest in these things, in the currencies themselves, and now presumably in some of the shares of companies that are dabbling in it. You've got them probably doing that in the hope that other people are going to do that, and so the prices will go on up. That is just a bubble, isn't it? I mean, it's just an archetypal case of a bubble.
Well, I mean, people like Keynes pointed out that the stock market is based on nth order assessments of what people think other people will think something is worth, and so on, almost ad infinitum. So it's a characteristic of what happens in markets when you're essentially trying to anticipate other people's behavior rather than understand the asset value of some business.
But what is the asset value of a business that says, hey, look, we made furniture, now we're going to do something in currencies, in Bitcoin or something like that? What is the sort of, how do you possibly think that this company is going to be in a particularly good position to generate profits that way?
I don't really understand exactly why such a thing has happened, of course, because nor does anyone else for that matter. But the idea that, changing the name of something would make a difference is as old as the hills. I mean, we've seen that happen many times when a company gets into trouble or a nuclear reprocessing plant, they change its name and then everyone's happy.
You seem much more relaxed about this than perhaps even the regulators are, because they're obviously worried that a lot of people are just going to lose quite a bit out of it, I think.
Well, I mean, I don't know how you can regulate for people to prevent them from speculating in the way that they see fit. I mean, there's no market if you regulate that out of existence.
Right. And if people lose money, the advice is not to invest in it if you can't afford to lose the money you're investing more.
Well, I don't know how much of the investments are discretionary anyway. I mean, whether everybody has sort of bet their hat on Bitcoin, I'd be astonished if that were the case.
Peter, thanks very much indeed. Thanks.